Okay, so August 2nd, 2 o'clock in the afternoon. This will be about an hour of this session. This is masterclass number 8, I believe. Number 3 is a remake, so actually it's number 7. This one is going to be on the basics of algorithm modeling. We're going to start. Boy, I love that chart. So what we're going to do is we're going to go into my TradingView account. We're going to find this natural gas chart we had started. And we're going to see how we're doing. Pardon me. Okay, so natural gas, since we charted, has done nothing. It ended up back where it was. That's interesting. Very interesting. So we got big resistance up here. Big support here. Kind of did the same thing here, didn't it? Or farther up the quad this time. Did anybody work this chart backwards by any weird chance? Just wondering if anybody did that. Okay. Well, maybe we should do a little bit of that first here, just to get a feel. So the basic rule of thumb is don't worry if your fib setup isn't really a fib setup. In other words, don't worry about the discipline part of Fibonacci. Worry about, because it doesn't matter if it's shaped like a lightning bolt, if it, the whole purpose of this is to give you an indicator in a time period that the natural trading state, which is arguable whether or not it's natural trading state or it's because of all the machines and the huge amounts of liquidity that these machines are trading with now. But anyway, the objective of the exercise is to find a time frame, because that's what these quads are, in which your instrument is trading that has natural people trading it, or natural people that program the machine to trade it. You know, to see if you can find patterns, because Fibonacci is based on basic patterns, right? Mathematical, but it comes down to patterns. And if you haven't studied the basics of Fibonacci's algorithm, I strongly encourage it. But that's what it comes down to. And for the new folks, you really want to watch that video on our website that gives you the real basics. So hover on About, then Algorithmic Development Process. And our host, I have it on my to-do list to tear right into them tonight. I'll be nice. And then click on this. A rare interview with the mathematician who cracked Wall Street. It'll give you an idea of what I'm talking about in terms of, the math all ends up as geometric shapes. So it's just a way of using Fibonacci that terminates or manifests on a two-dimensional chart as geometric shapes. And then once the most logical or proven time period is formed out, then technicians, computer scientists, coding people can code an algorithm to trade inside of that predictability. The last time we went to model natural gas, it was a disaster. It's one of the hardest ones. Volatility has been the hardest of all of them. I've spent some time in crypto lately, and it's quite easy, relatively speaking. The hardest part of this is just the time that it takes. Now, soon there will be machines that do this for you. And there probably are that we just don't know about. But there is something about getting your hands dirty in it. Like Epix charting would have never been discovered the way that Epix now works. I mean, Epix, for example, you can't take a standard Fibonacci chart and overlay it on it and have it just work for you. We're going to take a look at all those models anyway. So going back a little bit here, Let's go back again here. One more step. It's too bad. I was hoping we get to see a little width on that natural gas, but the width comes at the middle of the quadrant, usually. Depends, but I mean, at the middle you can almost be guaranteed you're going to get width. It can come anywhere. It depends on the natural state of trade, but like if you look at this quad here that's on the screen, see where the width came in the trade? It's a great example actually, right here. Came through the apex. This is what we call the apex, the inverse apex. You could call that the left and the right apex. But anyway, see, it comes through the top of the quad, through the apex, right down the middle of it, and there's the most width, most volatile width you get in the quadrant. Now oil, for example, is right now, that sweet spot of a quadrant. And so I'm in the trade, but I have to watch it close because I don't know if it's going to go up or down. I know its probabilities, and we'll get there. So that's good. The fact that it got volatile when it left the quad's good. That's appropriate. The fact that it sort of came down and tested the quad, but it also had a fib. That's good. The fact that it bounced off of this a couple times is good. Shows, fairly strong resistance in the grays, you want them to be strong. Oh yeah, sorry, width. Yeah, when I talk width, I should, height, volatility, great change in price. Yeah, sorry, that's my, what do you call it, slang for volatility. See, the money's made in width, right, or volatility. Big changes in price fast. So if you know where the possible width is coming, just looking at the way these two, oh, I see. If you know where the possible width is coming, like I actually have traders that DM me and stuff, like members and stuff, and they're like, why didn't you take that trade on oil? Or why didn't you take that trade on gold? And gold, like, I wanted to start trading it basically full time. And I've delayed it, and I'm going to start soon. But the point is that, like, I can't take every trade, right? And there's, I can't be up 24 hours a day. But it's not just that, it's that the cards never stop. And, if you're absolutely disciplined about this, you wouldn't take a trade, like, you'd only take maybe 3 trades in this whole quadrant, right? And so that time period is from February 17th to March 6th, right? In 3 weeks, you would take basically 3 trades. When it loses the support line and it comes down, you would take that trade. You might even cover here, you're short, and then hit it again when it fails here and continue, knowing that's the middle of your quad, right? And then when it got the mojo up in here, you may take the trade again. But for sure, when it leaves the quad, like, once you got the quadrants locked down, whatever you get into the middle of the quad, right here, or it tests the horizontal middle and gets back up over it. The middles are really important, like down here, and then when it gets back up, and when it enters or exits a quad. So, you could even in your mind's eye, right, like, well, you can draw it kind of like this. Like, the ones that are in oil are really cool. I don't know what they're going to end up looking like in natural gas, but the ones in oil are not just, four triangles. But in your mind's eye to begin with, you can just put four triangles in, right? One there, one there, one there, one there, and divvy up the quad, so you can tell easily to remind you where those center lines are too, right? But the width is really important, and then this is really important support and resistance in it, assuming that this is the 60-minute quads that we should have in natural gas. But so every time it comes into the quad, every time it leaves the quad, every time it's in the middle this way, and every time it's in the middle this way are really important. And you can see, look at the width you get here, the volatility. Look at it here, and look at it here, and here. And that's basically how you see here. So, it leaves the quad and it comes up to the mid here and it stops. And it goes, stop, bangs up against it, and then uses it as support. Now this is a little bit concerning, but quite often it'll overshoot, right? Because what the machines are programmed to do is they're programmed that when it gets to that decision at the quad wall, they stop buying. The buying over top is human until, and depending on the software that's programmed, eventually the machines start buying again. It'll take it to the next decision, which is this fib. And then the machines will stop and wait for the humans to go up or down. But the machines basically stop, of course, before it. But, so this is an overshoot. Pardon me. So the thing about it is, like, this would be difficult to program, because you want something that stops, as precisely as possible. And that's why the MAs on oil and, gold and silver and stuff, they aren't nearly as important. Now, this isn't respecting the quad wall either. And then once it gets into this area, it's going to pop. Now, it didn't really respect that either. So there's some good things about this and some not so good things. Like this is really good. This is very tradable until you get up into here, the overshoots. So that's concerning. And then this is good where you see this volatility, because that's the lower apex or the upper apex of this quad, right? But it's the mid area. So to see that there is awesome. It goes up, it overshoots the fib a bit here. But see, then you got to ask yourself, well, does it overshoot often? Does this always happen, like in every area? And if the answer is yes, well then that can be allowed for. Our other models don't do that. Comes down, this is acting right on the horizontal fibs. But you'll see once you start modeling that the diagonals are more important than the horizontals. And the whole market's using the horizontals, not the diagonals. Most, anyway. The market's kind of using the diagonals. They're kind of, they're calling them trend lines. But what you're going to be able to do is start to build the channels and know where the channels are before it gets there. You know a lot of stuff that the market won't know. Well, that, maybe 1% at the most know going in. So, there's an overshoot there. This makes sense with the fibs. This makes sense. That all makes sense. And then you get into the middle of the quad and look. And so basically what price does is it shoots for the middle of the quad. And that's good. So you get volatility here. Comes right up nice and precise there. But this was our original trend line, I think. I put in. So it's all based on this one, I think. Comes off. That makes sense. Overshoots here. Doesn't here. But that was the original one I put in. Yeah, I'm sure it is. And then, this kind of makes sense. So the middle of the quad is August 8th. So it's only 6 days away. So that's good. Let's just go back a little more. So I'm not convinced that it's the right one yet for the 60-minute. We're gonna find out. Sorry about the dog. The cleaning person is here. Actually, I clean my own place. They just pick up the garbage. Way. First time in my life. Okay. So that's good right there. This is really good. So that's really encouraging. The whole idea is to increase your probability. So if you're trading at, say, like I was at 60% before I started this work, if you can get yourself up to 80 or 90% win rate, a lot of people will give me a hard time and say, well, you base hit. Well, yeah, but you can base hit to wealth fast. Just figure out 1%, and I've told you guys 1% a month. I mean, a day. I haven't been doing that lately. Mind you, well, my swings I have, but not my day trades. But, then again, I work 80 hours a week, so how much time do I really have to trade? I'm in the trading business and I can't trade. Well, I do, but, you get it. I don't have a choice now with the fund, but gotta perform for that. This also allows you to be patient in a way that other traders can't be, because you know what's coming. Like, you know where your volatility is. Like, okay, there's a quad wall coming, I'm going to get volatility. The middle of the quad's coming, I'm going to get volatility. I'm exiting, I'm entering a quad. I'm getting into the sweet spot. And that's why you see on my Twitter feed all the time. I'm kind of antagonizing people, trying to shake them out of their reality, because, I see these oil traders trading on MAs or whatever. It's like, oh man. You should see what I know. So this is pretty good, hit the support, got up, overshot, like we've seen, overshot, got up and out. Now this is kind of common with the quads, where it shoots up into the quad, but when you're getting close to the end of it, so this is the end of a time cycle here. You're getting close to the end of it, it's really going to get volatile. But natural gas, man, this is probably it's the second most wonky I know about, right, in terms of predictability. Okay, I'm totally lost. If the price keeps overshooting then coming back, how do you trade that? Because how do you know where it's coming back to? Well, what happens is, here's how you trade it. So you're half right in your diagnosis. So because it is, this is funky. This isn't like oils, for example. Like, wait until you see oils. But it's kind of cool. We're starting with a tough one, because then when you get to oil, you'll be like, holy crap, can that ever get easy? And then you can tell some of the oil traders how easy it is. Anyway, you would take this as a long because it hit the quad and it went. Okay, so you're in it as a long. Now, at any of these fibs, you might just stop, or you might add, right? Gets up over the fib, add, get up over the fib, add. And in my oil trade right now, I'm in 2/10 on my oil trade so far in this quad. I'm hoping to get 10 tenths in. And this is how, right? So I'm in the early stages in here, 2/10. Actually down here is where I am in it. Yeah, I'll show you that as an example. So I'm in oil right now. It's in the sweet spot of the quad. It's literally like right here in the quad right now. Yeah, it's right here. Oh, wow, it just spiked. Nice. Well, here, I'll show you the picture of it. Let's bring it up. So it might be a little hard for you to see on your monitor, but so you can see how volatile I got here. So this is the bottom of the quad right here. This is the top of the quad below it. But anyway, this is the lower part. And so I took my trade in here and took my trade in here. And now it's getting up to the fib up here. This is a fib. That blue, baby blue. Once it gets up over the fib, so I'm in 2/10 right now. Once it gets up over the fib, I'll hit it. I'll be in 3/10. Once it gets up over this, you call it an interior quad wall or whatever, then I'll go again. And so that's just what happens as you go through. So going back to the other, so you would hit this when it so it overextends, but that's okay. I mean, it overextends, so it comes back in. So your first hit you would hit in here, then you'd wait for it to get up over that fib, and your second hit would be in here. This is why I go 1 or 2/10 at a time. And then it goes up and it overshoots, but it tested over. So, you might do that different ways, but you might be in 3/10 now because it gets over top. Then it fails up here, well, you sell. And you'll know because you've learned the discipline of your MAs, right? Going down to a tight time frame. Now that's something that we're going to work through in this, but when to sell that because the MAs have turned against you. That's just an indicator that helps you time that sale, but that's okay. So you sell up here and you would have done fantastic because the MAs would have turned against you, but you got that whole width. And then, so let's just, assume you did it perfect. So red is sell. Then it comes down here, it fails support here because that's a fib. And you might short to here and just get a little scalp. That's not a bad, it's not the best, but comes back up, it gets over top somewhere in here. So you might get chopped up a little bit in here because you might get in there, get out there, comes back, tests, and goes again. So you get in again. And then you get up over here, you go, and then you sell there. So all the way through you might sell or not. But see, once, you might be in and out a number of times, depending on how it handles the fibs and the quad walls. But there's no like simple, there's no simple, it's coming in the quad here, it's going to leave the quad over there. Now, that does happen. Like wait until you see the gold miners chart. It did that for a series of months. It would come into a quad, it would leave the quad at exactly the same, it would come in the quad and it would leave the quad the same place on every quad. It was absolutely insane. So you could enter and you knew where it was going to exit every time. But what makes this tradable is that you know that these walls and the mids are where your volatility is going to come. Now, to answer your question more precisely, so you entered here, you went all the way up. Right here, you would trim or get out because you're at resistance. So to answer your question, you would have sold. You would have entered there and you would have sold here. Now, you might enter again once it gets up over this. Typically, you'd wait until it gets up over the fib 2. It would be kind of fucky in there. So you get, you might get chopped up a little bit, but you'd flat, right? Because, or flat to small loss. It fails, you might get choppy in here too. It gets back up over, because you might short, right? Gets back up over and you're long. And your long is good to here. So that's why when you're at the middle of the quad, it's better because that's where the big width is. That's why this normally won't get as volatile as this, because the machine's programmed. They know that their maximum profit potential is in the middle. Well, you're trading on this time frame, depending on your quad, on your model that you've built. This one's hourly, yeah. Now you might have another chart, a conventional chart open, where when you get to your support and resistance areas, you're confirming on a tighter time frame, right? On a 3 minute or 1 minute or 5 minute when you want to exit. But you don't have to do that. Like I took an oil trade today, and somebody immediately DM'd me and said, "Kurt, you're not in the power part of your trade." And another guy said, your MAs on the one were against you. I didn't even look at my conventional chart. I'm going for the quad play, right? Like I'm here, so I'm going for here, right? I'm here, I want that. I'm not even going to look at my MAs and stuff until it starts to turn against me. Then I'll look, wherever it starts to turn against me. But I want that. I want this wall, preferably right at the apex. So if you look at my oil trade right now, so I entered here and here, it's getting up to the fib. Way up there is my, so I don't even look at my MAs in here and my conventionals. I just need to know this is the part of the quad it's in. But, it can fail in a way that the other traders don't, because they're going off of indicators that the machines don't care about. Machines care about what I'm showing you. And that's why quite often, like when oil happens all the time, where, somebody will be like, oh, it's, it's getting to this fib or whatever, or it's, overextended. And I'm like, it ain't overextended until it's at one of these walls. And it ain't at support until it's at one of those walls. But the biggest thing is the volatility, knowing where the main actions can be. Now, this is funky. This ain't like oil, but we're going to do more modeling on it and see if we can bring it so it's predictable. You're saying, Trace, the oil pattern's way more predictable than natural gas? The thing that you have to keep you have to keep in mind here is that I can't remember how many hours are in Epic's chart, but I think it's something like 6,000 hours. We've got an hour in this one. So what happens is, it just gets better and better and better and better, right? As it gets more precise. Like Epic's chart is crazy if it's precise. Like somebody that doesn't know how to trade algorithmic modeling can look at Epic's chart, and very quickly they know if something's fucky, right? Pardon my language, but Like even this, right, where these are 30, and the thing is, it's one thing to look at it after the fact, it's another thing to watch it live. The oil come up and bang into this diagonal right here, and back off and bang into it, and back off and bang into it, and bounce in between these two in that one candle. And then all of a sudden, candle moves over perfectly, boom, right? And it bounces back and forth in between this and this and this and this, and then so it's different watching it live than it is static. But yes, you're right. Like natural gas is definitely different. But there are some good signs here. This is a very good sign. The fact that it hit there and it bounced. This is a good sign that it bounced in there. Is a good sign. So we're going to just work it through and see what we can figure out here. The fact that this happened here is a good sign, right in the middle. So then you just start working your chart back. This is really a good sign in here. But was this the first one? No, it wasn't. This is really good. Like that action there is perfect. Because it bounced in between and then boom, came down. So let's just work it back a little bit here and take a look. This is actually pretty good. You know, sure, it's overextending every time, but if you understand that it's doing that, like if that's the nature of what you're trading, that's no big deal. Because you're just exiting anyway at your orange diagonals. Seriously, it gets so easy once you start doing it. But you have to understand the nature of each one, right? Like the nature of our dollar algorithm is completely different than oils. And you'd think their nature would be very similar, but they're not. What's going on here? And these, you're never going to get them exact. And TradingView is going to move them around on you. That is frustrating, but we're working on, I mean, we're not physically working on, we're working on in our development plans to solve that. But it all costs money. Our estimate on Epic is just to get the basic algorithm out and finished and coded and everything about 2.8, and then completely done, probably closer to 12 million, 12, 13 when it's done. Done, like, but that's as an intelligent assistant. So, you know, you look at this and you say, well, that's really screwy. It is kind of screwy here. See, it's overextended again here. So maybe the model's wrong. We're gonna have to work on this. See, and then, you know, the comment, it's especially funny on epics, right? When somebody's like, oh yeah, draw 1,000 lines and it's going to hit the odd thing. Well, you know, draw 1,000 lines and some circles with targets on them for exact time and price. And let's see how your chart does, you know, random lines and targets, right? See, the way, where these are going is the intelligent assistant is, it's already being used, you know, like these are available. It's not like they aren't available. It's just that retail can't get a hold of them, the good ones. And anything retail can get a hold of is crap because the barrier to entry is so huge, right? I mean, 10 million bucks for an algorithm is not cheap. But you know, even the Holly Wall Street guys on CNBC are using them now. You know, they're buying different intelligent assistants. IA versus AI, right? See, there's lots about this that screams it's right, but then, you know, I'm going to work it back just a little bit further. So it could be that we have the right side angle right, but not the left side, because it seems to be the left side that's overextending all the time here. Well, we're going to find out. Remember, this is all hand drawn, right? So these aren't exact. So you gotta use a little bit of, as you're modeling, a little bit of mind's eye creativity. Just see yourself, okay, well, that's not perfect, because you'd end up modeling it later perfect. You just want to know if it's going to work. And then the thing is, like, 60 minutes might not be best, right? Like oil, the best one is 30 minutes. For whatever reason, the developers that code the algorithms chose 30 minutes. Now, did we figure that out day one? No, we did not. It took a long time. See how that's working? So that's the right side of this quad is working perfect. That volatility when it came to this wall, perfect. Support when it came to that wall. Just about touch down to the middle, very close. Very interesting. Not the best model, that's for sure. Pretty screwy. So then the question is, so on the left-hand side, it's extending farther than it should. Just gotta find other examples. Yeah, so it happened here too. So what we have to do is we have to, because if that's the case, now I'm gonna screw with the model here and show you something. So if that was the case, then what you do, so this was the first, I think that was the first line we drew, that trend line. Can't recall, but I think it was. Anyway, but see this, See, this here is exactly the opposite of another quad I seen back, the last quad that we drew out there. If you mirrored this to the bottom, so if you flipped it, put it down on the bottom, it was identical. Where it just about hit the middle of the bottom I showed you. So yeah, I was going to show you how you would, well, what you would do is you would simply, now pretend like there isn't even a model here. Well, yeah, there's different ways you could do this, but let's do this. And it takes a long time to change a habit. So what do we say? Oh yeah, the right side works. So we'll do this with change color. So the whole purpose, what I'm doing here, the objective is to get that left side to work, right? So all I want right now is lowercase. So clone, right? So if it was sitting there, it would be right. Except for this. So let's just assume that for a second. So format white. And if that's my left side, then my right side look like this. So then all I do is I take that and reproduce it, right? So remember I said it, we were going deep on this? It's very tedious. That's what I meant by deep. And if it's not your thing, don't worry about it. If it just aggravates you or whatever. Wouldn't that be right like this? What am I missing? Yeah, that would be there. Damn. Oh, I'm having a problem. Well, anyway, it would be somewhere around here. It doesn't have to be exact right now. Okay, I'll change my mic. How's that sound? Awesome. Awful. What awful? Graphic. Darn it. Nothing changed in here either. Uh, no, it's not. I'm going to kill my social here. Just give me a sec. I didn't actually kill them, I just closed them. Any better? Scratchy. 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 How's it sound now? Oh, nice. Hey, Reed. I didn't know you were in the room. Gotta stop talking about Reed, I guess. I would only say good things anyway. That's my way. So, how did I get those? All I did was I took this one here, because the idea was, it was that far over, so I just literally, cloned it and moved it over. Because that one moved over, this one had to move over. I'm kind of just eyeing it up right now. So, if I took these and I duplicated them, would they work is the question, right? So it works there. But it wouldn't work here. Worth a darn. Right? Because it would be about here, correct? Somewhere in this vicinity. Right? That's the problem with what kind of works. That's the part we're discovering it right now. I guess it would kind of work up there too. Right? Because it would sit right around, I don't know, something like that. Now we could be dealing with something similar to oil. Natural gas, it has a weekly reporting time period too, right? When does it report? That's interesting. We might end up with something like Epic here. Because you see the outside quad walls Epic, right? Oh, you can't see them on this chart. Yeah, you can if I bring it. Uh, every quad wall has 2 lines. What's the reporting day for natural gas again? Tuesday or Wednesday? I mean Thursday. Anyway, when somebody looks it up, let me know, because we need to know that. I think that's what we got here. Interesting. Yeah, it's not easy, this one. So what you have to do as homework is, next one's tomorrow. So today is Wednesday, so Thursday is at 10:30 a.m. So see, if you look at the last video when we started this model, you'll see how I started it. And then I discovered that there's an anomaly or a divergence on the left side. And this is a great way to see it here. Because sometimes it responds to this and sometimes it doesn't. Sometimes it responds to this. So why is that? But it responds to the right side as far as I can tell. Now you'd have to build the model back. So that's where you got to do some homework. You got to build the model back. But if you look at Epic's chart, now if you could just imagine, let's do it this way. Let's go over here. When you use Epic and you see how crazy predictable it is. But yeah, I can't even bring up that quad right now. What I'll do for tomorrow is I'll render this, because it takes about 20 minutes to render this properly, so that we can actually use it and view it and stuff. Because I got so much going on. There's the dollar. That's what it looks like. Gold simple. Yeah, I don't even have a view of Epic that's wide. Yeah, that's too bad. But anyway, well, we could do it this way really quick, because the purpose here is just to show you something quick. So I'm just going to go into the oil room and move this chart for you. So this is the bottom of the quad here. And I take the quad and I move it. Now what I'm going to do is I'm going to give it more room here for a minute. There. That's easier to see. So this is the bottom of your quad. This is the outside walls. Right? Now, when it's trading in here, this is the outside wall. See how it got up to the outside wall and it came off? When it's trading in the next quad, then this is the outside wall. It's hard to explain, but they flip. But the point is, so it's like a baseball diamond, right? And if you look at Epic's EIA reports on YouTube, you'll see a description of how it looks and works. Well, there's a how to use, right? I'd strongly recommend that for homework, how to use Epic's charting to trade it, because the principles are in there for you. Anyway, the point is if you simply put standard fib diagonal trend lines on an oil chart, you would never get these lines. Now they are diagonal fib trend lines that make up the quadrants, but they're not based on the way that you would typically do it, and it's hard to explain in short. The reason I'm saying it is that these fib lines are directly related to the reporting times for oil. So Tuesday at 4:30, Wednesday at 10:30, and Friday at 1. That's why we have the targets, right? So this was today's target. It came up, missed it, and down. But it hit, or yesterday's target, sorry. But it hit the lower one. I could just skim this one. Targets have been really wonky in oil. Wonky's not even the word for oil lately. I mean, it's out of control. Trying to trade it. You know, we've got the chart, so it makes it way more predictable. But see, the candle actually got into the lower, even though it missed the upper. So the secret of this, part of the secret sauce, is that it's got, its fib lines are based on the reports. So going back to natural gas, but my guess is that's why the one side, I don't know. My guess is that you've got a quad report. So the reports are Thursday at 10:30. Now the problem is that these are bigger quads. So there's lots to think through here. But at the end of the day, this comes down to working it through on the 60-minute, on the 30-minute, and it's a whole bunch of going backwards and seeing if things respond. Now, if I was trading natural gas, and we're gonna do this for all kinds of equities. I'm gonna show you how the other ones work and stuff. I'm gonna show you how to do simple models. So I think what I'll do tomorrow is I'll revert back to a simple model, because natural gas is so freaking complicated. But what somebody will have to do is some homework on that natural gas one and work it backwards, and then we'll come back to it once we know, because there's no use in wasting class time for somebody just to clone it back, right, and give us an idea of how it functions. So tomorrow what we'll do is we'll go into a simple model like HIIQ, and we'll model this one back and see how it works. Well, nothing would, yeah, I see what you're saying though, Greg. It's whether or not this seasonal would affect the trade of natural gas. But once you're, because an algorithm is just a model, right? Once your model's in place, it's in place. It doesn't change. But my whole point is we're going to do a more simple one, because for now, because the whole idea is for it to be useful as a tool to trade with. That's the first objective, right? Like I did with HIIQ. So we're going to do some of that tomorrow. But in the meantime, I'm going to leave you guys with this homework where somebody has to work model back. It doesn't take long, it only takes an hour or so. You just take that, the orange, not the white. You could take both, you could try both, model them back. But I can almost guarantee it just from what I'm seeing here. I mean, I could be wrong, but I bet you that Thursday at 10:30 is going to play into this somewhere. I can almost guarantee it. Because it's got two sets of support and resistance, just like oil. And we just end up calling it a test line because that's basically what happens. It's like it tests. And the other thing too is that these lines, like this isn't the most recent epic chart. These lines move a little bit. So on the most recent epic chart, you know, oh, sorry, I'm not even showing the epic chart. Yeah, anyway. So yeah, you've got to model it back. Somebody's got to model it back. In the meantime, we'll go into a simpler one. And I'll show you how to use it intraday when you're actually trading. Let's take a look at where oil is right now. I mean, natural gas. And then we'll also get into different time frames. So we might even just do that first tomorrow. But we are going to need you guys, like you guys through the series, are going to have to model these back because we can't take the time in class for me to just, you know, sit there and run them back, right? So I might even do that tomorrow. I might change the time frame to 30-minute and 15-minute, etc. So yeah. So if nobody, well, I guess I'll check in with you guys tomorrow and see who actually modeled it back. If nobody does, then I'll have to kind of twist some rubber arms. But there's something here. There has to be. But it might be wonky. But the thing is, it always makes it better either way, whether, you know, it tests perfect or not, because it gives you a roadmap that you wouldn't otherwise have. It's just how good is the map. That's what it comes down to. Reed, you kind of got another model you're working on that it's probably where your attention should be. I hate to butt in there, but and be that guy. But anyway, if you want to do a little bit, go ahead. But yeah, I think it's going to work. Like, it looks more positive than the last time I tried to model it. Like, there's stuff in here I really like. This is really good. This is really good. So this is really good. Yeah. Anyway, so that's the class for today. The idea is, what was the class that you just seen? You take the model and you work it back and you look for how the model reacts in each quadrant and whether or not it's something that's possibly going to help you trade. And until you go back and duplicate this, you won't know that. So what I'll do is I'll publish this privately, and then I'll put the link into the room here. Yeah, it's not necessarily that it's completely more important, but it is beyond technical analysis. It is very important, there's no doubt about it. Natural gas, publish private idea. Yes, that's the idea. Okay. Then Oh, whoops. Maybe that's what I did with that epic chart earlier. Somebody was saying it didn't work. I sent the update out. The refresh chart. Okay. That's that. Should be nice to have a model for it. There's definitely some nice range in Natty. UGAS and DGAS, you can get a lot of range. Okay, so that's the basics of building your model out backwards and what you're looking for. Real basics. Once we have more built out backwards, then we will know whether or not it responds properly. Because when you really get going on these and you really want to build one out that is predictable, you have to go back 60 months. So there's a bit of work there. I'm going to a meeting. I'm not going to dive right now. I'm going to a meeting. And yeah, so it's 3:15 in the afternoon, and I'll see you guys in the morning. Thanks for coming out. Oh, do you have any questions for me really quick? My meeting starts at 3:15, so unfortunately I don't have a lot of time, but if you do, let me know. That totally gave me a headache. Well, you're not the first woman to say that to me. They have a habit of that. Yes, we're going to be doing this many times. You bet. You know how we go through those midday reviews over and over and over again? Yeah, for sure. Cool. Okay, I think that's it. No problem. Take care. Sorry for giving you a headache, and we'll see you in the morning.